Folks, I have been investing for over 40 years. I have seen panics, bubbles, wars, recessions, and every flavour of Wall Street hysteria you can imagine. And I will tell you something, the best investments I ever made were the ones where everybody else thought I had lost my mind. Right now, I am looking at a $5 stock that the market has completely written off. And in my experience, when the market writes off a wonderful business because of a bad cycle, that is not a warning, that is an invitation. In today's video, we are going to break down 4 things. Number 1, why drone stocks are starting to reignite and what it tells us about where government money is flowing. Number 2, how far I anticipate SpaceX-associated stocks like MNTTS and RDW will rally before June 12th. Number 3, an update on one of my favorite blue-chip software companies that reported earnings yesterday. Absolutely crushed it, and the market did not give it a lick of credit. I will tell you exactly why I believe that is the opportunity of a lifetime. And number 4, the main entree. A $5 stock that I believe is a wonderful business hiding behind a terrible-looking chart. I will lay out the case and let you be the judge. And as always, if you are the one taking the ultimate risk, you have got to be the one doing the ultimate research. Always do your own due diligence on every idea presented. Let's get into it. Now let's start with UMAC, Unusual Machines. At the time I am filming this, domestic drone maker UMAC is up about 95% just in the past month alone. About half of that happening today. Why? Because the Wall Street Journal reported that the Pentagon is in active talks to back and take equity stakes in the domestic drone sector, and they specifically named UMAC. Let me give you some context. Back in late October, I explained that UMAC had won an early and key Pentagon contract, and I made the case to buy it. The drone procurement cycle was skyrocketing, and the policy priorities coming out of Washington pointed squarely at a surge of capital into this space. Drones are a key component of modern warfare, and I have always said, invest in what is essential. Right now, domestic drones are essential. Then, at the beginning of March, when the US-Iran conflict broke out, I said UMAC is not going to be trading this low for long. You are going to regret not buying it. A couple of weeks later, the stock almost doubled to $21, and I kept making the case. Pair together the Iran conflict usage of drones with the Trump administration's backing of domestic industries deemed critical to national security, and it is hard to imagine UMAC not continuing to trade overall much higher. Well, now it is May 28th, and I am looking at this stock. Big congratulations to the folks who played this and got a big gain. This is another example of doing the research, looking at the facts, and being patient. That has always been my game. I do not buy stocks, I buy businesses, and I wait. Now, what is coming next for UMAC? Keep in mind, UMAC was the only publicly traded stock named directly in that Wall Street Journal story. The indirect names riding the theme are AVA, KTOS, and NDS. And I want you to understand this pattern. It is tried and true. Here is how it goes. First, the named stock gets the violent move. When a company is specifically called out in a report like this, that is where the buying concentrates, which is exactly why UMAC is the one gapping 26% rather than the others. The smaller the company and the bigger the headline relative to its size, the sharper the spike. Second, the move spreads outward by association. Traders cannot buy the private names, so money rotates into the broader publicly traded drone basket. AVA, KTOS, NDS. These tend to move less and later because they are riding sentiment and read-through, not confirmed money. Third, and this is the part that trips most people up, the initial pop often fades. A report about talks is not a signed deal. The stock front-runs an outcome that may or may not happen yet. I continue to believe there is long-term upside in KTOS. I think it is a really good value right now, but just wait a little bit, because the sell the news cycle is going to come around again. Now, I have got to talk about the space sector. Our space ideas have been going absolutely crazy, and I want to focus on the two most popular today. Redwire, since my $8.69 call-out on May 5th, is now sitting at $25.44, has not even been a month yet. And Momentous, since my $7.38 call-out this past Sunday, is now at $18.62 at the time I am filming this. Big congratulations to the many folks who have done extremely well on these two stocks. Now, these are two entirely different businesses. And I want to be very clear about that. Redwire, RDW, is a high-quality business, minimal dilution risk, serious long-term potential. This is the kind of company I understand. Established space hardware with actual diversified revenue. A real backlog. Real contracts across both commercial and defense government customers. Solar arrays, avionics, deployable structures, sensors. Their acquisition of Edge Autonomy expanded them into drones, which is very relevant right now given the new executive direction from Washington. I have always liked picks and shovels businesses. Levi Strauss made a fortune selling jeans during the gold rush without ever needing to strike gold himself. Redwire is doing something very similar in orbit. Momentous, MNTTS, is a very different animal. Way smaller, way more aggressive moves possible. Much higher risk. Quality product, but the stock has a significant dilution history. And I will be honest, big dilutions are probably coming after the SpaceX IPO, in my view. The story is eye-catching. Microcap focused on in-space transportation. Their Vigoride orbital transfer vehicle ferries satellites to their final orbits. Former Canadian astronaut and International Space Station commander Chris Hadfield serves on the board. Chairman and CEO John Rood was the former United States Undersecretary of Defense for Policy during Trump's first term. For how small this company is, the story is way undervalued relative to its size. Now, on Tuesday, the company registered a $200 million shelf offering on a stock sitting at roughly a $185 million market cap. That is no joke. The reason the stock did not tank is that a shelf registration is not the actual dilution itself. It generally takes around 30 to 60 days for SEC approval, and only after all approvals go through can they actually issue shares. The people buying it for the SpaceX anticipatory run toward June 12th are not worried about it yet. They still have that runway. But I want to give you a fair warning. Stocks that can go aggressively up can go aggressively down, sometimes more than you would ever expect. In 40 years, I have always said the first rule of investing is do not lose money. The second rule is do not forget the first rule. As a stock rises, the risk rises with it. Please be mindful of that. Now I have got to talk about Salesforce, ticker CRM. In my 40 years of investing, I have noticed the market has a habit of panicking about the wrong things at the wrong time. Right now, it is panicking about AI destroying software businesses. And Salesforce just reported a quarter proving the exact opposite. Yet the stock barely moved. In my experience, that kind of disconnect between reality and price is where the real money gets made. Here is my honest concern. The bears are pointing to slightly light guidance for next quarter. But if you dig in, it is due to renewal timing on an older product and some lumpiness from a recent acquisition. Nothing to do with AI fear whatsoever. My takeaway. Record revenue, massive earnings beat, billions in cash, AI line growing triple digits, a $25 billion share buyback from a company the bears say is heading toward bankruptcy. In 40 years, I have watched great businesses buy back their own stock at depressed prices over and over again. That is management telling you something the market is refusing to hear. That is the signal. The noise is everything else. I think Salesforce is a buy right now. The market is sleeping on a record AI quarter, and patient investors are the ones who benefit from that sleep. Drop a comment right now. Are you currently holding any government defense or AI names? Because what I am about to show you next connects everything we have talked about today into one single setup. Now it is time for the main event, Big Bear AI, ticker BBAI. I want to tell you something I have believed my entire 40 years in this business. The stock market is a device for transferring money from the impatient to the patient. Right now, impatient investors are handing over shares of Big Bear AI at $5 to whoever is patient enough to hold them. Most investors have never heard of Big Bear AI, and that reaction is exactly why this is the most interesting setup I have seen in this market in a very long time. Here is what Big Bear AI actually does. BBAI builds AI-powered decision intelligence software for the people who have to make the most important decisions in the world: the United States military, intelligence agencies, national security operations. Their platform, Ask Sage, is a secure AI assistant built specifically for government and defense teams. It lets an analyst query classified data in plain English and get actionable answers immediately. This is not a consumer chatbot. This is classified-grade AI software embedded into critical national security infrastructure. Here is my honest concern. The chart looks terrible. The stock has been beaten down. Retail investors see a $5 price tag and assume something is broken. That assumption is doing a lot of heavy lifting, and very little of it is based on the actual business. My takeaway: the moat here is trust. When your software is embedded inside classified US government and defense systems, when it has been security cleared, when agencies have trained their analysts on your platform and integrated your tools into their daily workflow, no startup with a slick demo is walking through that door. The security reviews alone take years. BBAI already has those approvals, already has those contracts. That moat is real, it is deep, and it gets wider every single time they win a new contract. The company carries a $282 million backlog of contracted revenue. In May alone, they announced a $53 million classified intel community contract. Biometric deployments at Chicago O'Hare and Dallas Fort Worth. New shipbuilding work. Expanded Ask Sage contracts with NASA, Army Intelligence, and the Naval Research Lab. This company is winning new business every 2 to 3 weeks, quietly, consistently, without much fanfare. That is exactly how I like it. Let me bring this all together. 4 stories, 4 completely different corners of the market. UMAC tells you that domestic drone manufacturing is now a national security priority, and Washington money is moving. Redwire and Momentous tell you the space sector is not slowing down, but the risk profile of each name is completely different, and you need to understand which one you own. Salesforce tells you the market is mispricing a record AI quarter, and patient investors are the ones who benefit from that mistake. And Big Bear AI tells you that the best moats in this market are not the loudest ones. They are the classified ones. Here is the investing truth I want to leave you with. In 40 years, the formula has not changed once. Find a wonderful business. Wait for Mr. Market to offer it at a foolish price. Then have the patience to let the thesis play out. The investors who build real wealth are not the ones who nailed one trade. They are the ones who showed up consistently, did the research, managed the risk, and stayed in the game long enough for compounding to do its work. Do 3 things before you close this video. Hit the like button. It helps this analysis reach more serious investors. Subscribe and turn on notifications so you never miss a breakdown like this one. And drop a comment telling me which of these 4 names you are watching most closely. I read every single one. No sponsors, no fluff, just the analysis. See you in the next one.